Hey everyone, Brian Balon here, your local Phoenix realtor, and I am coming to you with another video here about the market. So I want to talk about the current market in the Phoenix area, some updates. It's now mid-July, July 19th is when I'm actually doing this video. Before we get into that, please subscribe to the channel if you haven't already and hit the notification bell so you can get updates on videos. Also, if you have any questions that you've come across or interested in even moving to Phoenix, or if you're watching this as a real estate agent, feel free to email me. My contact info is below if you have questions or referrals for anyone who's moving out into the Phoenix area. So there is a problem right now in the market, in the Phoenix market. And the problem is that we have very low inventory. I recently did a search just in the greater Phoenix area, Maricopa County, but more really within just the confines within like 40 miles from the center of the heart of Phoenix. And there's about 8,500 active single family listings, which is very, very low. And a balanced market in the Phoenix area would be about 50,000 listings, and we're running at 8,500 just for single family. I included townhomes, multifamily, stuff like that. But with that low of inventory with an abnormally high buyer demand, and we measure that by under contracts, we're actually selling more houses. More houses are going under contract than are actually coming on market, which is just another indicator of how hot of a market it is, how strong the buyer demand is. So here's the problem is that, I have a handful of buyers and they're looking to buy a house anywhere, Southeast Valley, West Side, North Phoenix. And they fall in love with a home after showing 5 to 10 homes. They put an offer in and pretty much expect at least one other offer. What sellers are doing now is they're waiting a couple days. So they'll start showing, let's say on a Friday. They won't review offers till Sunday and make a decision on Monday. So it gives time for people to put in their offers. And by the time we're done with it, there's 10 offers, 12 offers, and they're all very competitive. So what do you do, right? What's the recourse? So in this video, I'm going to go over 11 options that you have for you as a buyer when you submit an offer, what you can do to negotiate. And before I get into this, you definitely want to just understand what your position is, get really clear. If you're working with me, I'll have a conversation with you about what your financial position is, for how much you can pay out of pocket, how much you like the home, what are you willing to do in terms of terms to make your offer the strongest it possibly can. Because a lot of it comes down to money, but it doesn't always have to come down to money. There's other opportunities, and we're going to talk about that. The first one, of course, deals with the money, so we'll get those. We'll talk about those right now. The first one is offer above asking. So when we're offering above asking, it already seems like you're getting ripped off, right? I mean, they only want 300,000. You can offer 305. It sounds like very unreasonable to make an offer like that, but it's actually not, because if you really want to buy a house or need to buy a house and you really want a particular house, offering anything under asking, first of all, that's the starting point now, is offering, at asking or above. There are some parts of town where you probably can get away with that and with offering under asking. But what I do is I'll ask the listing agent first to see where the offers are at. If there's no offers, then we might have a chance. But if there's already offers that are coming in, or if it fits a template of a very popular home, chances are it's going to be sold pretty quickly and with multiple offers. So offer above asking. And that's just really the primary mode that I recommend my clients, is that, if at least there's one other offer, I'll find out if it's at asking or above, and then we'll go from there. We'll try to strategize. But really, it's like that. I mean, the asking prices now are really just starting points, and what wins is over that. So offer above asking. The second one is keep the offer clean. So there's a lot of terms you can ask for, right? Unless, like for instance, you can ask for like refrigerator, washer, dryer, personal property, an above ground spa, right? A furniture, if they offering it. If they're not offering it and you want something, then it does make your offer weaker. So a clean offer would essentially be anything that the seller is offering. So let's say if they're offering just a refrigerator, then you can put that in the contract. But if they have a really nice washer, dryer, leave that out of the contract. So that's clean. Also, closing costs. So in every purchase of a home, you have closing costs. Lender has fees, title company has fees. There's prepaids for your HOA or property taxes, things like that. So your closing costs are basically out-of-pocket expenses that a seller has and a buyer has, each individually, and they're customary. They're all negotiable as well. Typically, the past few years, I've been able to get concessions from the seller to pay buyer's closing costs, but now a clean offer means we just have the buyer pay their own, the seller pay their own, and that's very common. You can also request a home warranty. You can negotiate other terms, keep it clean. Basically, is the best advice there. Because anything that nets, really, you got to think about it from the seller's perspective. Anything that nets the seller less or gives the seller more hassle is going to make your offer weaker. So definitely do the best you can to keep the offer clean. The third one is provide higher earnest money. So earnest money is like good faith money in a contract. Really, what you're saying is I'm putting down X amount of dollars up front to be deposited with the title company, just to say that, hey, I'm really serious about this and I want to buy your house. And the more money, of course, the better that it looks. Now, I've seen some out there, when I've bid on homes in the Southeast Valley, they have $100,000, $120,000 down on a $300,000 home, which, from a seller's perspective, that gives them a lot of confidence. Also gives them a lot of confidence that they have cash, because in an appraisal situation where appraisal is low, that might actually be a problem for the seller, but someone who has 120,000 may be able to fork out the cash. So they tend to like those better. So there's that. But yeah, higher earnest money, the better. And that's why it's so important to know your financial situation. If you are, how much out of pocket can you really afford and being able to contribute towards, if an appraisal falls short or toward a seller's closing costs or something of that nature. But the higher the earnest money, the better. Try to be qualified for a conventional loan. So, ideally, first of all, when you're applying for a loan, you're trying to get the best loan that you can. Just want to give you a note that if you have an FHA or a down payment assistance program, which, by the way, they're out there, you might be hearing that a lot of lenders have actually stopped writing down payment assistance loans or zero down loans, which is true, but they're still out there. They're just harder to find and have higher stipulations for credit score, income, work history, things like that. But the best one is conventional. If you have a loan, the one thing that beats out, or the few things that beat out conventional loans or any mortgages, is cash or like hard money loans, because they basically, those are pretty much like cash as well. So yeah, conventional loan is very strong out of the three mortgages types of, well, there's four as a VA loan, but conventional has one of the most flexibility in terms of terms and things. So for instance, FHA, if there's a guy or like a seller who's flipped a house, so they bought it within the past 90 days and they flip it, and then, let's say they put it on day 60, they can't actually, like an FHA loan can't buy that house. It has to be held for 90 days to be FHA eligible. So it's stuff like that. Where you have more strength and more options with a conventional loan, but conventional also has higher stipulations as well. Although lately I've seen that FHA's also, some of them have bumped up to 640 when they're usually 580, but some people are still writing at 580. So what I've heard, some lenders are, so it's out there. Next one is be with a reputable lender and title company. So this is one thing that you can use to sort of leverage your lender and have a conversation with the listing agent if they're open to it, and talk about the quality of your buyer, right? And they can talk about their financial situation, if they're pre-approved versus pre-qualified, which basically means they've gone through underwriting or basically, they've got pretty much far, so where it's they're like that money is going to be theirs unless they the buyers do something like buy a lot of furniture on credit or buy a new car or something like that. That could ruin their pre-approval. But barring that, no extreme circumstances like that, or anything that changes, then they're pretty much it's much stronger than a pre-qualification. So yeah, have them have a conversation and vouch for you as a buyer. The title company. They can even, if you have a good connection with your title company, have them talk to listing agent as well, because they're going to want to know how smooth of a transaction it is, how much is it going to cost, because if we use my title company, if you use the listing agent's title company, you could get better rates. So all this stuff, like, you really have to have both your title and your lender company really get your buyers back and your back too. So you can use that that tip to really speak to the character, if you will, the quality of your buyer. Here's one that's really interesting, and is one that's actually more common now because of how strong of a seller's market it is, but it's called an escalation clause. And an escalation clause is essentially basically whatever. So you, like, let's say for instance, my buyers have an offer. They want to offer, say like 5,000 above. Let's say that they're buying a house for 300,000, and the asking price is 300,000. They want to offer 305. So they want to offer above asking, but they're willing to pay 310 if another offer goes above 305. And they'll pay $1,000 over the highest offer that they receive, and that's called an escalation clause. So it's a way to sort of bid without knowing what everyone else's offer is, and kind of gets you just a bit more competitive. It is more risky because it could be as high as whatever 10, 15, 20,000 over. I've even heard stories about that at 20, 30,000 over list price. So it's that hot. It is risky in that way, but if you really love a home, it gives you an opportunity to get into a house. Now, you can also limit your escalation clause. So you can say, I'll pay 1,000 over the best offer, the highest offer, up to, so let's say back to that 300,000, you can say up to 315. So now it's really important for you to research, what I typically do is I'll research the comps in the area to see its likelihood of appraising, because that's another big factor. And in fact, let's just talk about that. So when you do an appraisal, so you go through an inspection period. Once that's done, they order the appraisal, and it's ordered by the lender, and they send a unaffiliated third-party appraiser out to the house, and they will check to see if the house is worth what is it worth, and they have their own ways of doing that. If it's a new build, then they do a cost analysis, and then if it's resale, they'll typically do a comp analysis, and then just see recent solds in the area and adjust, from 3-bedroom to 4 or whatever is available, and evaluate your home. And if it goes under, say, a $300,000 home, and it appraises at 290, now you have to go back to negotiations with the seller and find out if the buyer can come up with cash, or the seller comes down on the price, or no deal, the buyer can walk away and get their earnest money back. And so, but yeah, so that's kind of how that works and how that plays into things. Now, if you offer, 300, 15, 20,000 over, let's say you offer 320, that's accepted, and it appraises for 300. Now, you sort of have a situation where you negotiate with the buyer, or the seller and the buyer, to figure out, who's going to come down, who's going to go up, or how we're going to conclude. So escalation clause, though, it does sort of compete. If money's the bottom line, it helps you to compete there. So another thing too is the standard, or the customary, if you will, that's default in the purchase contract, is a 10-day inspection period. So what you can do, actually, this is one like non-money way to sort of sweeten your offer, is to shorten your inspection period. Instead of 10, do 7, 6, anything less than 10. Because from a seller's perspective, if you say your inspection period is less than 10 days, that means if you back out, right, instead of a 10-day, they have to wait 10 days, or up to 10 days. Now they only have to wait up to 6, because you said I'll take a 6-day inspection period. Well, that's only 6 days. They save 4 days of being off market, and it exposes the seller to less risk, so they can go back on the market and get another offer, or potentially take one of the ones that were multiple offer, because things move pretty quick, and buyers can kind of, by 10 days, that's like sometimes that's like 1 or 2 rounds of offers for buyers, especially those who are serious. So 6 days will definitely capture some. If they kind of wait week to week, if the buyers wait week to week to show and submit offers, you might have a chance of getting one of those back in for the seller. So shortening it is really going to help you. Shortening your inspection period is going to help you in terms of communicating to the seller, hey, I'm less risky because I'm only doing 6 days. Now, The thing about the inspection period is that you have standard 10 days to go through the home, do all the inspections you need to do. And if there's something you disapprove of, you can back out. The buyer can back out and win their earnest money back. So that's why if a shorter inspection period sort of shows that you want to protect the seller, but also that you're serious, that you're going to get on getting your inspector out there and do what you need to do in a short period of time that's normally allotted. So there's that, and then so there's that one. But another one here is you can offer to pay the seller's closing costs. Now, I haven't personally seen this yet, but if things continue to go the way they are, if we get down to 5,000, homes on market active, and then it's, we have even more buyers, we have more under contracts, and it's even hotter than it is now. This could be where things are headed, to where, you can only cut down the price of a house so much that now it's time to, pay for the seller's closing costs, because exposes them to less risk. Or it gives more option, I guess, for them to, get more money out of it, if you will. So, they could raise it 10, 15,000 and then make more money on the seller concession or the buyer's concessions really now. And they're going to be, getting an extra $3,000, $4,000, $5,000 out of the deal because the seller's now not paying that out of pocket. So just lots more options there. And that might be down the road, maybe a year from now, if things continue to go the way they are without any significant change, that's what we can see happen. So basically those are pretty much the options that you have there. One of the things though that I'd recommend is, and I go over this over other videos, but definitely don't give up. It's hard out there right now, and it's when you get rejected. If you're looking to get into a house or you're looking to get in the market, and you're kind of not sure how things are, it is very competitive right now. So I tell my clients just to be ready, because it could take a couple times, like, just to be honest. And so if you're going out there and putting offers on homes and you're getting rejected 1, 2, 3 times, it's just part of the process. Working with a buyer right now who's they've been rejected. Well, they put offer on one and they got rejected on that one. That was hard for them. It was the first one. The second one though, we got it. We were in a multiple offer situation, and we beat out somebody who had $120,000 down payment, and my clients didn't. There were other offers too. I think there was like four or five, and it was in the Southeast Valley, which is super hot right now in terms of demand. So we won, but they decided they didn't want it. So we sort of backed out of that one. But now we're going into another multiple offer situation, and we'll see how it goes. But the point is though, is that they're staying in it, right? They're staying focused, and they realize it's part of the process. So definitely don't give up. And these tips here should help you be able to position yourself and your offer in the best way possible to get you the best chance, really, is what it is, the best chance of getting a home that you want. Now, again, can't highlight enough, definitely know your financial position, what you're willing to do, because most of the time it does come down to money. But there are some times I've heard where a seller, not an investor, owner occupied, they want another family to take care of the home that they had all these memories in, and create their own memories and keep that going. So sometimes they'll want to give it to somebody they feel like can fulfill that, or some kind of legacy or need, or like build family, like whatever values they have. They want that to the next buyers or the next owners to be an extension of that. So the last one I'll mention is to write a letter to the seller, and getting an idea of the seller. You can sort of get an idea depending on how much the listing agent's going to tell you. But overall, though, if you just talk about you, right, and or you and your family, what really impacted you about the house, what you plan on doing, if you're raising a family, what memories, events, what kind of things that you want to do there, and who you are, and instead of just the numbers, help them to see who you are as a family, as people, and that will sort of tinge the the human side of things, the human side of real estate, and they can help them realize that this is actually people that they're selling a house to, and it's not just about the money. So anyway, I hope this has been helpful for you guys. Thank you so much for watching and being part of this. If you have any questions, just feel free to comment in the chat box, or once this video is uploaded, I can answer any questions you have. Again, if you haven't already, subscribe to the channel. Thank you so much for your support, and we will catch you next time.